It's very rare, I find, that the banks actually are turning to public commenting to figure out what on earth should we do. It's funny that we are used to banks actually telling us what they're going to be expecting, or the government is going to tell the banks what to do. But it's very rare, I find, that the banks actually are turning to public commenting to figure out what on earth should we do. And that has me like quivering in my boots a little bit, you guys. Now, let's see who is actually doing this. Let's jump straight into the story today. Now, this is for Canada, but there's something called the Office of Superintendent of Financial Institutions, OSFI. Now, who are these people? Well, they are the government entity that is in charge of directing the banks and seeing what they do. Now, earlier in the year, well, like not even that many months ago, they changed things. Now, this is the first shot into the air saying that there's something that could be going on. So, what they'd say is for every $1 million mortgage, let's say, okay, $1 million home in Toronto, the bank must keep $10,000 in cash in a little side account over there, just in case a percentage of people default on their mortgages for whatever reason. Okay, so every $1 million mortgage, $10,000 cash in the account. They just, to me, did something earth breaking, like earth shattering. They raise it from 1% to 3%. So for every $1 million home now they have to keep $30,000 in cash on the side as a buffer, as an emergency buffer. Now, it doesn't say under like a lot for a big multi-billion-dollar company for 20 grand extra for little old me, but imagine if you're talking about tens of millions of people, okay? We're now talking about putting tens of billions of dollars in cash. Now, where does the banks get that? They have to liquidate stuff in order to have that big savings account. Now, that is only happened to triple it is huge. And for this to happen just like that overnight means that the central banks are worried. This article, if you want to look it up, OSFI, you can go to that website. And this is what I was talking about, the domestic stability buffer at 3%. You can read more about it, but it's exactly what I'm telling you. And I wanted to look at today. This article I saw. The banking watchdog, or the OSFI, okay, seeks input on beefing up homebuyer stress test. Okay. But the default risk is rising. Yeah, people are running out of cash. They can't afford this, right? But I found some parts interesting. This is the top bank regulator. It's seeking public. Guys, I find that really funny. Public commentary. So they're not saying we would like the top 5 banks to get together, the brightest minds, all the economists that are out there. No, they're just saying random Joe walking by. Okay. It's like the Much Music corner. I'm dating myself, right? Just anyone walking by. If you could give us some ideas on what you think we should do. They propose complementary debt serviceability measures, including interest rate affordability stress tests, loan to income, debt to income restrictions. Listen, all of this doesn't matter what they choose. It's all restrictions on who can buy. So what is this today? It's called the mortgage stress test. So mortgage stress test has been around for a while. They've revamped it several times. I think 2012, 2018, something like that. But what it means is if the rate today is sitting at 5.5%, you need to qualify for 2% above that. Could you pay 7.5% interest? So when they do their calculations, put in your price of the home and your salary and who you are, credit score, they're going to pretend that the rate is 2% higher than it is today. So if today's rate is 5.5, they're going to make you qualify for 7.5. Now, if they hadn't done that, we already would have been in a lot worse position than we are today. Most homes in Toronto are down 20 to 30% already. It would have been a lot worse if it was not with that extra stress test. Now, this is a mortgage analyst. He says, essentially, the Office of the Superintendent of Financial Institutions, the bank regulatory, wants to skim another layer of the least qualified buyers out of the federally regulated mortgage market. Now, that's just one guy's opinion, but this is actually the truth. They don't want anybody who's even close to that. Now, I've told you before on this channel, we had a client that went to the bank and he wanted a $250,000 mortgage. His salary was really, really good. His credit is over 800, and they wanted $1 million collateral for a $250,000 loan. So I would like to challenge you guys just to go contact your local bank, or you can contact a mortgage broker and just ask them, what's going on? What are you seeing? Because what we're seeing on the ground is people with excellent incomes and excellent credit are still getting declined. In the past, when I started my career, you could get a mortgage approval sometimes same day, couple days, then it became a couple weeks. Nowadays, we're seeing some people go a couple months and cannot get qualified. It is becoming more and more and more difficult. So remember, there's always a difference between tight money and loose money. And everybody thinks that, well, I'm just going to wait until interest rates get cheaper and then I'm going to buy. But what you don't remember is back in 2010, when the rates were cheaper, money was extremely tight. You couldn't get money anywhere. You had to have 70, 80% down on a home. You couldn't have 80% mortgage. They'd maybe give you 20% mortgage. Like, these guys are serious and they're afraid. So when we get to tough times, money is not available. It's all dried up or froze up. Let's go back to this. these jokers over here. They're trying to skim people out of the market that can't buy it. And so remember, homes went down 22.4% over the past 9 months as they've raised up those rates. Now, that is the average in Canada, you guys, the average. So if the average home has gone down 22.4%, listen, in Toronto and the surrounding areas, we've seen areas that are down 40, 50%, depending where it is. But remember that the things that you want go down. The things that you need stay the same. So if we take that as an example, here in Toronto, there's homes that are out there that we're asking 30 million that are now on the market for 18 million. At the same token, those apartments, those basic condos that are required for living, like a little 2-bedroom, those things haven't gone down at all. In some cases, they've gone up. And why is that? Because everybody downgrades. They get smaller, they downsize. But most people aren't willing to pick up and leave all their friends and family and go to another country and or province or whatever. That is the main difference. So it kind of scares me when the government's asking for public commentary. I think they should open a YouTube channel and just, wade through the comment section, and see, do they like public commentary as much? I don't know. I'm wondering what you guys think of this stuff, because it sure raises a couple eyebrows for me. Anyway, if you know anyone that this could help, please send it their way. Remember, the next 2 years is going to dictate the next 20 years of your life. So stay tuned. We're going to get through this together. We're going to come out the other side a lot better. I also did a video on this book right here, Only the Paranoid Survive. This is how to exploit crisis points. Now, this is every company and career, but I would argue it is also for your own personal development and for your family's personal development. It always says you have to make advancement between the waves. So between crashes, or you're having a tough time with your marriage, or you're having a tough time with your business, or you're having a tough time with a kid, we always have to be continuing to strive to be better. Anyway, I'm there for you guys. We really appreciate you. Thanks very much for following us, and I'll talk to you soon. Thanks so much for sticking around. If you like that video, you might like this one, and maybe something like that.